Good morning, everyone, and welcome to the European crossover webinar. And we are seeing the dollar yen, actually these yen pairs strengthen here. You can see that even with the Aussie yen, I got stopped out on that, but I'm looking to re-enter. We do have a little bit of a gravestone doji on the 2-hour, but we are seeing these yen pairs certainly going in and make the move here. And certainly here with the dollar yen, obviously with the dollar yen, because of the move here that we're seeing in U.S. rates has even jumped further than what I would have even expected here. A moment. Okay, we'll have this right here at the 10-year yield. Not only have we broken even higher, we've even taken out the 170, which is at 38%. And we're coming up right here. You can see this comes in right there at 175. And let's go mark this off here. Yeah, it certainly made this run and has made a very, very good run up here. Look at this. Pretty good solid line of resistance too. All the touches. Right there. It's a pretty good solid line up here. If we can make one more jab up in here, that may allow this dollar yen to get to the level that I have in place or have been in place for a while. So it didn't look like it was going to get up there. Now, it obviously does certainly look like it wants to make that jump in there. And that's 788. And you can see how much of a big resistance 788. We've actually already made a move towards that this morning. Got right up there to 785, 784. So whether we'll make that one more jump, and saw a nice little dip right after that. But here we are coming back with a vengeance. And we may see if, especially with U.S. yields pushing up a little bit higher, maybe we can goose those stops up there. But you can see that right there, coming across at 788. You can see that's a huge, huge, huge level right there. Euro trading relatively quiet overall, and cable just pushing a bit higher. Really, nothing else that I can I can see myself that we did see the dollar CAD kind of slide right back down after making a move higher. Back on Monday we had our bias chart support at 31.36, and the market stopped at 31.40. We rallied up. We had 32.05. We rotated lower. And we came down here and tagged, 31.35, so off by a pip, and then we've just kind of hung around here. So we mentioned we may see some covering there, and we did. Obviously, we want to keep an eye on this yen here, see if we can make that move up there, see if we might be able to blow the stops here and take out 788 maybe, and then that might set itself up as we've stretched ourselves quite a bit. Same here with these U.S. rates have really made quite the move here. Dollar's trading relatively quiet, just a little bit better, firmer bid. Here's the dollar yen on the daily. On the daily, about the 778, but on the 2-hour, you can see 788 is the area that for this pair to get to and challenge. We did make it up to 785 or 784. Would like to see this take out this level 788 and then come back in a bit. Let's go on and take a look at the news. Fear subsides, although caution remains. The partial reversals of August fear trades continued overnight as investors positioned for the upcoming big central bank meetings in Frankfurt and Washington and reassessed a plethora of political, economic, and political risks while reemerging from the hosts of summer safety trades. U.S. President Trump's sacking of his hawkish National Security Advisor John Bolton overnight was seen as potentially easing the risk of a military confrontation with Iran, and is combined with the gradual easing of both no-deal Brexit fears and worst-case scenarios from Hong Kong protests to let the air out of some safe haven trades. The planned resumption of U.S.-China trade talks has helped. China has exempted 16 types of U.S. products from additional retaliatory tariffs in a conciliatory sign from the Beijing, amidst the reports of by U.S. agricultural produce, after all, adding to the improved mood, even as the signs of ongoing industrial slowdown. Data shows China's auto sales fell for a 14th consecutive month in August, while incoming economic numbers are hardly encouraging. They appear to be calibrated with market expectations, and economic surprise indices are turning positive for the first time in months. All that has led to a time of paring back of some of the more aggressive easing expectations from the ECB and Federal Reserve over the week ahead. Several reports suggest the ECB may stop short of beginning a new bond buying campaign just yet. Governments in Germany and elsewhere in Europe were talking about more active use of fiscal policy to support growth. Overall, that's seen bond yields and some sector rotations to value from growth stocks over recent sessions. Wall Street's major stock benchmarks were mostly flat on Tuesday, and the 10-year U.S. yield climbed to its highest since August the 12th overnight, hovered around 171. Currently, right now, we're at 173.90. The inversion of the yield curve between the 3-month and 10-year narrowed to its lowest in more than 5 weeks. The perceived safe haven of Japanese yen has also continued to unwind, with the dollar yen rising close to 108 for the first time since August the 2nd, helped by reports that BOJ is considering further easing next week, too. Gold prices fell to their lowest level since August 13th overnight, stabilizing. In Europe, where all the focus on tomorrow's ECB, Germany's 30-year bond yield remained positive early on Wednesday after popping back above 0% for the first time in more than a month yesterday. Euro-dollar held shy of 10.50. Asian markets were mostly upbeat with the yen retreat and the BOJ speculating helping Japan Nikkei to rise almost to 1% earlier. Seoul's Kospi was up 0.9 too, while Hong Kong's Hang Seng outperformed again with gains of 1.6% as activists called off protests on Wednesday in remembrance of the September 11, 2000 attacks on the U.S., helping to deflect accusations in Chinese media that terror attacks were being planned. Dollar supporting cautious trade ahead of ECB. The dollar steadied on Wednesday as investors' appetite for risk showed cautious improvement, and the yen weakened in the shift away from safe havens, but the currencies kept to tight ranges ahead of a series of major central bank meetings over the week. The single currency edged higher to 10.50, with bets divided on the likely scope and style of stimulus. Nobody really wants to commit yet, says Matt Simpson. We've had a trade war boost last week. It filtered through this week, and so markets are taking a bit of a breather. Now it's a little in between stage, which is going to want to keep that value going. The ECB is likely to set the tone for the upcoming rate setting decision by the U.S. Federal Reserve and BOJ next week, and the broader global risk appetite. Since being fired by news last week that a new round of U.S. trade talks were scheduled with China next month, the risk-on sentiment has begun to fade. There's still enough optimism left for Asian equities to move higher and for U.S. bond yields to hold near a 1-month high, with the retreat of safe havens and the pound at 23.56, blah, blah, blah. ECB were toward a revival package of includes a rate cut. And Germany signaled readiness for relaxing its stance opposition to deficit spending to support the economy. On the other hand, concerns have been building. The global central banks are reaching the limits of their stimulus. It remains to be seen whether the incoming policy by the ECB will be enough. ECB's policy decision conveyed the outlook. They may prompt immediate moves in the dollar, considering euro counts, blah, 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 a bunch of junk. Makes no difference. Okay, so let's go on and take a look where we're at right now. Sometimes these guys, they have nothing to say and they just repeat a bunch of dribble. Let's go and move into the bias chart. Okay, well, looking at the euro dollar, really no changes here whatsoever. I mean, we're just getting ready for ECB day, which is going to be tomorrow. And when we look here with the euro, I mean, on the daily, you can see here, it just looks very, very quiet in very, very, very tight range. To get a better look at, we would have to go move into the 2-hour chart. There's no changes here, none whatsoever. We'll expand those ranges tomorrow with ECB, but for right now, 1060, 989. I do like this 989 on the downside. As I mentioned, I don't think there's any reason, would have been to say, okay, the support is here at 1030 or wherever. It's going to be 989, and the market has really run into a real ceiling at 1060. So that's where we stand there. No changes here. And let me mark this. I do want to see if, in case we do hit. I don't think it marked it. Hang on. There we go. I do want to get loaded in case we make up there and we take out those stops up there. We've had that 788. Let's go move on to the cable. We're pressing up a little bit higher here with the cable and a little bit firmer bid. We talked about yesterday when we had that 23, the option expiration at the 23 handle, and we've since turned away. We've continued to move higher, but things are relatively quiet here with the cable. If we're looking ahead here, bias chart resistance would be right there at 2406. We go. And 24.5 is the 127% extension of this move from 2309 to 1959 down there on the lows. Support is going to remain here at this 2282. Same thing, trio trading relatively quiet. Move into the Aussie dollar. Had a nice little move up here in the Aussie. We've got this resistance coming in here at 68.75. I think we kept that the same from yesterday. We did, and we'll still keep that in here, which is, you can see right there coming at 68.75 here. No changes there. On the downside, we did open the door up a little bit earlier. Remember how we put it down here to 68.23 in case we do slide? I still like that 68.23, which just tests us just beyond the 68.31 here. And you can see that here with the Aussie dollar. Also 68.80 is at 80%. Just move. We've already taken a stab at that. And let's go move into the Kiwi. Well, we're keeping ourselves in time with here, this Kiwi. It is just very, very quiet. After a pretty good solid move, so just kind of, I won't say we're consolidating. We're just kind of holding steady, just treading water is probably the best way to go and look at this. Had 64.37. I want to keep the 64.37, and same thing here on the downside. Here, 63.70. No changes here. So relatively quiet day right now so far, and with the exception of the dollar yen, which is continuing to press up a little bit higher here. Move on to the dollar CAD. Well, we had 31.36 on the bias chart support here. I actually thought, I don't know why I have 30.62. I could have sworn we had 31.36. Because I said, hey, if we slide right back down, but we shall see. Maybe I'll put that 31.62 off the 2 hour. But it's actually 30, it should be 31.36. I remember even referencing that when we mentioned here. You can see here, initial support is 31.36. That started at the beginning of the week. So I'm not sure how that got marked there for 62. So here's that 31.36. We had it on Monday, and I remember moving it, and we ran up higher, and that was when we made that move higher. And I guess that was the layer. We had that 32.05. But we made this move down here. We're once again challenging, and the low on Monday was 31.40. We did take this out by about, I think it was a pip or just a little over a pip, and then we found a little support. We're just kind of holding steady here. Let's go and move into the peso. Well, looking at the peso here, pull this up. I'm going to do this. Remember this, I was going to be pretty ticked if I didn't say that, which is, it's the 1950. We had the 1950 from the start of the week. We mentioned about this 1950 being the 50%. And it was on Monday, I think it was, we took it, we got it to as low as, I think it was 1947.70. And I remember mentioning, hey, that's a pretty good little area. And we saw a good bounce off of that. And yesterday we made a run also up to 1960. And we had our bias chart resistance here at 1968. We rolled back down the hill. We did have the Mexican minister saying something about the currency being a risk, which was a little bit odd, I thought. But we'll go into the 2 hour chart. And you can see here we've made this challenges, or not challenge, but retested this 1948 area here again. Kind of pushing a little bit here. I was thinking this would be a pretty good buy if we had made this dip down here, this 1937, but we're kind of holding here at this 1948. We're going to, well, I'll tell you what, we'll move the bias chart down here to 1948, just a hair lower. call it just 47. But we will go and keep this 1968. 1960 did cap the market, but if we can make a pop in here, I would look for this, not have to get a pretty tough time to get beyond this area right there, which is actually 68.6. Just keep it as 1968. Still, this market is bullish because once we got past this 1923, despite this pull down, it's still on the bullish bet overall. Now let's go and move into the dollar yen. So we've got this daily resistance here at 778, and certainly we've seen this move basically predicated on what we've seen here with, I mean, there've been talk about the BOJ, but they're always talking about, I mean, you know, I'm sure most of us were in our cradles when they started doing easing. Seriously, I mean, when have they never talked about doing easing? So, but we'll go on and move in once again and take a look at where this you can see here with 10-year yields, and this is what's prompted this. Now we're kind of struggling a little bit, but once again right here, this is what's prompted this move of the dollar yen, is this big run up in rates. I'm struggling a bit here. So it's the resistance is going to be 788. And support will come in right there at 742. And then we'll see if we can, let's go see if we can try and push this area, but the 10-year yield is just barely easing a bit. We've already had a pretty good stretch here. And let's go into the dollar index. Well, this is trading relatively quiet. The same thing with the euro. No changes here in the cash dollar index whatsoever here. 98.63 right there, and on the downside 98.14. And I'm not sure what this is about. There's just a bad quote here by TradingView. So let's go move into the cross rates. We can see here with the Kiwi Yen, we've got a nice little gravestone doji, and we've rotated from this area here, right there. You see that? So we're going to go and put our resistance right there, because we already had a pretty phenomenal move, and this actually got past the 38% right here at 68.95, struggling. We have a pretty good little level here. Let's actually go on and thicken this up a bit. Very nice level there. Coming in right just at 69.44, 69, call it 69.45. So that resistance is going to be right there. 69.29. And support. It's going to come in right there at 68.85. And let's go and take a look here at the euro yen. You can see here we came right up here almost to tagging this level, which is going to be 19.25. Take a look at it on the 2-hour chart. Well, it looks like we had a pretty good stretch here. Look at that. Got a little decent little band coming in right there, and that's where we've barely even popped above. We're starting to slide back. Resistance end is going to come in right there. $19.09. And support's going to be a challenge back to this line here, which is 18.36. Next up is going to be the euro odd. We talked about this area here, and we said there's a good little support here coming. We mentioned the 60.42. I don't think the market ever quite made it down there. But there's additional support at 60.26. And beyond that, be 59.89. So if you're looking to pick this up at a pretty good area, you may see a pretty good reaction if we do see the euro eventually strengthen. But we're going to go and we're back here testing that same level again here. Got 60.42. I'm going to go back and list that back to 42/26 in case we do make one more dip lower here, but take a look here on the 2-hour chart. We've got this listed for six. Got to move this down to 642. There we go. And I've even got that with a little bit of a dip potentially at 60.26. But this market is really taking quite the dip here. And let's go move into the Euro Kiwi. Now we had our support here, buy chart support yesterday for 71.47. We'll move into the 2-hour chart to get a little bit closer look here. We're actually firming up a little bit better now. We're going to go and keep this here, although I think we could move this up here to 71.63. The problem is with the ECB, you can really start to see things really move about. So in the meantime, we'll just go and keep this here for now, 71.46. We actually had 71.47. And on the upside, we had 72.51. Got 53 actually marked here. We'll go and stay with this. Well, where this line is marked at 72.53. And let's move into the Aussie Yen. I actually got stopped out earlier on this. This was really frustrating. The thing that kind of ticks me off is because, you know, I'd added and I quickly covered on a scalp on the ad. And I said one of the reasons I covered on the scalp on the ad was because, you know, once again, I mentioned before, it's not paying attention to my exponential moving averages, which is because, and you can see this clearly on the 2-hour, but when you look at the 30-minute, I always tell people one of the key moves here, although this was where you get a buy. Okay, you've been on a solid buy. You see that? And then we didn't get much of one, but you can see here you get a little bit of a sell signal and you flip it back to buy. Generally what that happens in that situation is the psychology behind that is, look, see how long this thing's been on a buy? Look at that, for a very, very long time. Although it wasn't much of a sell signal. It was, if we dipped here, that would have been a little bit more foreboding in the sense, but you can see we did get a little bit of a sell signal, but it wasn't much. But generally when you see this and you go flip to a sell and you flip back to the buy, then anybody shorts in that, then you end up seeing the market chase much higher, and then people are forced to end up covering, and then it feels as more fuel to the fire. But it wasn't much, I'm just saying. But one of the things that got me, I mentioned, I said, hey, look, we just jumped into a buy signal again here, and certainly we've seen this move. Obviously, there's more to it. Obviously, with the yen weakening, with the thoughts that BOJ is going to do more. Also, equities have continued to remain higher. Different reasons, but I mean, at the end of the day, the technicals tell the story. You see what I'm saying? So, so that being said, resistance. You look here. This good, pretty good little solid line comes in right there, 74.08. So we're going to use that as our resistance. And for support, you even make the case right here on a very short-term basis at 73.59. And let's go move into the guppy. Well, we are seeing sterling continue to go in advance here. And we've even gotten past this area. This is decent little resistance level here. This isn't much to measure off of a fib here. Or above the 23%. And, you know, we haven't seen a good reaction to say, okay, here's a good reaction right here. I mean, that's just barely even a blip. You see what I'm saying? So I'm not going to measure anything off of that. What we can do, look, is look at an extension here. So well, we're just bumping up here actually at the 161%. So 33.20. You can see right here off of this move here, 161%. We're struggling right there. And we've actually just gotten past this one level right here. So, but we're still holding up. We're still holding up. As I mentioned, talk about the BOJ taking action next week, potentially. And this should be right there at 33.20. And we're right here, right there, 33.20. This is one you want to keep an eye on. It's 33.31 right there. And that's where that stopped, right there, 33.31. Let's mark that off. We're smack dab right there. Look at that on this 2 hour. We're going to call it 33.20. And for support, it's going to be right there, 32.50. And let's take a look at Sterling Odd. This hasn't moved. It's just relatively quiet. We're just stuck in the middle here. No changes, 79.29, 80.53. Coming into today, you can see the data coming into the States. We do have PPI, but it's final demand. We do have Mexican industrial output. But once again, PPI is going to be final demand. Canadian capacity utilization and wholesale inventories at 10 a.m. Eastern. And back to the main page, dollar yen still pushing up against here at 780, 779. Nice resistance here, as I mentioned here at 788. You can see the significance of the 788 coming across here. Look at that. Absolutely huge. 788. Ten-year yields are kind of backing off a little bit, so we'll see if we just kind of mark time here. But very solid resistance up there, 788. There's a bias chart. I get that print up in the room and post in the room. And thanks for joining us here on the European crossover.